You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 27th day of December, 2022. Hope you had a great Christmas weekend, holiday. Hope you had a chance to spend some quality time with your family and all the ones you love. And most importantly, I pray that you as a family had an opportunity to spend time together where you really thought about and talked about the true reason for the season. So, thanks for joining us today. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast begins at 9:30 a.m. Eastern and ends at 11:30 a.m. Eastern. That is our live training room, and it is reserved for members only and those who are taking their 1-week free trial. If you've never taken your 1-week free trial, when Michael comes on in a few minutes, he will show you exactly how to do it. No credit card required. We invest our time and resources in you, giving you full access to everything we offer, so that at the end of the 5-day trial, you're able to make a well-informed and intelligent decision if you think you have what it takes to be a trader, and whether or not you want to make an investment in yourself to actually become a trader. Seems like a pretty fair deal. We invest in you before you invest in yourself. Now, at 11:30 a.m. Eastern, we do take a 30-minute break, and we come back for the afternoon broadcast, which is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. It could be a phone, a tablet, a PC, a Mac. We're not picky. The afternoon broadcast starts at 12 noon Eastern, and it is the broadcast of indeterminate length. Some days it'll be 2 hours, some days 2.5. Just depends upon how active the markets are and what questions you might have. Now, there are 2 different ways to join this afternoon broadcast. One's a little better than the other, so let me give you the best way first. And you only have to do this once. Go to mytradingiq.com. Scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and then every trading day going forward, you'll get an email right before the broadcast starts, and all you have to do is click the link in that email, and it will automatically log you into our platform. The reason I say that's the better way is because it does give you access to the question box so that you can ask questions and participate in the discussion. Of course, there'll be times when you're out of the office, away from your desktop, on the fly. So even though you're away from the office, you still want to join the afternoon broadcast live. Piece of cake. Take that internet connected device, whatever it is and wherever you are, and point your browser to our YouTube channel, which is very simple to remember. You already know youtube.com. Just add a /CFRN. youtube.com/CFRN. Not only do we broadcast live every day on our YouTube channel, we also archive each and every daily live broadcast. Currently, there's over 2,100 daily live broadcasts archived for your educational and viewing pleasure. If you're new to the world of CFRN, it's one of the quickest ways to get to know who we really are. Not who we appear to be today, but scroll back 6 weeks, 6 months, a year, 2 years, even more. Just pick days at random. And you, of course, don't have to watch the whole 2-hour plus broadcast. You can simply fast forward to the part where Michael's doing a recap of the live training room, or I'm doing the recap of the big picture, what's moving the markets, the logic alerts, the concierge trade alerts. And what you'll find, if you spend a little time doing exactly that, just scrolling back and picking days at random, you'll find the thread of continuity and the thread of connectivity that weaves itself through each and every daily live broadcast. So with that said, let's open with a word of prayer. Now, for the past week, of course, we had a holiday in there, a couple of holidays, Friday and Monday. We were not open Friday. We've been talking about 5 life lessons from the book of Ecclesiastes. Our scripture today comes from Ecclesiastes chapter 12, verses 13 and 14. I'll be reading from the Message translation. But regarding anything beyond this, dear friend, go easy. There's no end to the publishing of books, and constant study wears you out, so you're no good for anything else. The last and final word is this: fear God. Do what he tells you. Now, you remember last week we talked about what fearing God means. It doesn't mean to be scared of him. If you do a little bit of word study, we covered this last week. It means that you respect him. And that's it. Eventually God will bring everything that we do out into the open and judge it according to its hidden intent, whether it's good or evil. Again, Ecclesiastes 12:13 through 14. Today's life principle, this is number 5. Fear God and keep his commandments. So, what does Ecclesiastes tell us about how to lead a meaningful life? How should we live correctly? Finally, what is the concluding statement of Ecclesiastes? First, I can't resist sharing the concluding statement of Monty Python's 1983 British-American comedy film, The Meaning of Life, in which Monty, like Solomon, searches for life's meaning. The film concludes by saying, well, it's nothing very special. Try and be nice to people, avoid eating fat, read a good book every now and then, get some walking in, and try and live together in peace and harmony with people of all creeds and nations. Again, that's courtesy of Monty Python. Some of you in the audience are old enough to remember Monty Python. Indeed, some good advice, but the conclusion of the matter in Ecclesiastes is that we must respect and obey God. Humanity's duty to lead a meaningful life is to keep His commandments. In the end, God will judge everything we've done, whether good or bad. Thankfully, Christians receive forgiveness of sin and eternal life through the blood of Christ. Still, we appear before His judgment seat. Therefore, we need to have a proper relationship with God and keep Him at the center of our life. Question: are you living your life under the teachings of God's Word? Solomon gives us sound advice. We would be wise to respect God and keep His commandments. And a little trivia: how many commandments can you remember? Give yourself that self-test after the broadcast. Join me now in a word of prayer. Heavenly Father, thank you for your word. Thank you for the wisdom that it contains. Help us all to be willing to learn all the lessons it has to offer and not go chasing after the wind, so that we may live our lives wisely to your praise and to your glory. Thank you that even though there are times when we stray from your side and seek after the things of this world, that in your grace you draw us back into your loving arms. We pray that our lives from this day forward may be a life that is consecrated to you, and that our eyes would remain fixed upon Jesus, the author and finisher of our faith. It is in Jesus' name that we believe and pray. And everybody said, amen.
Amen.
Alrighty, let me give you the numbers from around the world, and then Michael will give us a recap of the live trading room. Alright, starting here in the U.S. with the cash markets, or the indices as they're called. We've got some divided markets. Well, when it comes to the indices, as futures traders, we like to see them all red or all green. But let me give you the numbers. Currently the Dow is up 165 points. The NASDAQ is down 82 points. The S&P 500 is down 2.5 points. And the Russell 2000, or man in the street, down 3.5 points. So as far as the indices go here in the U.S., the only green on the screen is the Dow. It's up about 0.5%. In the commodity basket, crude oil up $1.27, trading 80.83 last. That's a gain of over 1.5%. Gold up $25.30, trading 18.29.50 last. That's a gain of almost 1.5%. And silver up 37 cents, trading 24.29 last. That's a gain of a little over 1.5%. In the Asian markets at the close, Nikkei posted a gain of 42 points. The Shanghai added 30, but the Hang Seng fell 86. And in the European markets at the close, FTSE up 3, almost 4 points. The DAX up 54 points. The CAC up 45 points. So that gave us a mixed day in Asia. It was a green day for the UK. No movers or shakers, but a green day nonetheless. And here in the US, it is a mixed Radio Tuesday with the Dow in the green and the other three major indices in the red. The NASDAQ, the deepest in the red, almost 1%. So with that, we'll go to Michael and get a recap of everything that happened in the live training room this morning. After that, I'll come back and we'll look at the Logic 247 alerts, the Concierge Trade alerts. We'll take a look at the daily charts, the 30-minute charts, and at any point during the broadcast, if you have a question, all you got to do is type it in the question box, and we'll be very happy to answer it for you. Michael, take it away.
Okay, here we go. Good afternoon, everyone. Hope you all had a great Christmas holiday. Today is Tuesday, the 27th day of December, 2022. Now, if you have not taken a free trial with us and you want to, go right here, mytradingiq.com. All you need to ask for, I'm not going to do is click on this link right here. It says sign up for your free 5-day training and trading right now. It goes from 9:30 to 11:30 Eastern time. Now it goes for 5 consecutive business days. So if you start today, your 5th consecutive business day will be a week from today. Okay, because there's a holiday in between. That said, if you're going to sign up for the trial, click it right here, and then you're going to be sent to this page where all you have to do is fill in this little form. Once you fill in that little form, oh, that is not the right link. Okay, I think I need to refresh this page. I think I need to refresh this page. Okay, you click on this thing, and it's going to bring you to here where you need to fill out this little form. When you fill out this little form, you'll be sent. I still got to refresh it then. You'll be sent to another place where where you fill out. You give us a little bit of information. We'll send you everything you need to get into the room in the morning. Okay, is this the right one? Anyway, you send everything you need to get into the room in the morning. Once you do that, the room runs 9:30 to 11:30 Eastern time. You should go here to trading platforms at mytradingiq.com. Click right there, trading platforms, and download whichever trading platform you have. Now we use DT Pro. If you don't have a platform, use DT Pro, and your chart will look just like mine. All right, you can download everything in here. Right. What I will do once you get DT Pro downloaded is I will send you a current workspace that's got the current data in it, and you just need to load that workspace up. Right, follow the instructions, everything you see in here. And that's what you need to do. If you have TradingView, that's great. Just give us your TradingView profile name, and we'll set you right up with that. If you have NinjaTrader, you're going to have to give us your NinjaTrader machine ID. Okay, for that, you need to go to your control panel, which is this thing right here in the background. Go to that, go to the help and about menus on that. And the machine ID is the 5th line down. Copy and paste that in an email and send it to us. Right? If you're going to bother taking the trial, you should download the platform. If anybody who is in here right now has not downloaded the platform and you're on the trial, you're really selling yourself short. You really need to download the platform. Okay, you got to have it in front of you while you're taking the trial. Then you're not just looking at it 2 hours a day. Okay, you have it all day beyond the 2 hours. You can look at it at night whenever you have time. You know, if you have a regular job. If you're on vacation, that's great. You can look at it anytime. Anyway, so let's get into the spreadsheet. All right, so today was an okay day. It wasn't great. It took me a long time to get the goal. But if you're going to look at the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 27th day of December 2022. We made 6 ticks in crude. We lost 7 in gold, and we made 23 on the ES. That puts us at 277.5, 277.50 on the morning session. Today it took 52 minutes and 10 trades to get there to 277.50, and we took a total of 10 trades. So I'm not sure that this total number is right. That implies that I didn't take another trade in the last hour, pretty much of the morning session. I'll have to check that out. I think I did that. That number might be a little higher right there. But anyway, that puts us at $11,820 on the month over 17 trading days, averaging $695 per contract per 2-hour trading day on the month. That is one contract, 2 hours per day. We've gotten our goal every day so far this year, and if I finish out the week getting my goal every day, it's only 1, 2, 3 more days. It'll be the first time I've ever done that. These are unprecedented times. gone a whole year without a down day. And it'll also be this spreadsheet will be 10 years old at the end of this week. Regardless of whether I have a down day or not, this spreadsheet will be 10 years old at the end of this week. It's 10 years worth of daily data. That's a big deal. Anyway, we've gone 243 out of 243 days on the year getting our goal, and we've gone 304 days since our last negative day in the room. That puts us at $237,166 on the year. So we're averaging $975 per contract per day on the whole year. On the month, we're just at $695 because it hasn't been a great month. It's been a great month. $695 is great, but it hasn't been as volatile as it had been the rest of the year. But anyway, if you were to quit trading when you get your goal for the day every day, and that's where we want you to be consistently profitable, getting your goal every single day. If you were to quit trading when you did that and you were to add 1 contract a month, you would have only had to work 44.08 hours so far this year on the whole year, and you would have averaged $4,765 per hour. That means right now you'd be trading 12 contracts on each trade, right? But you'd have worked your way up to that, earning money every month, getting to the next contract every month. All right, so let's get into the trades that we did do. Now we had however many trades it said. We had 10, I guess, right? So let's just look at what we did, all right? Now, this was our moment in time. So during that last hour, we didn't do any trades here in gold, all right? During the moment in time, right in here, I thought it was going to go up to here. Now, we were on this bar right here, and I had no idea where it was going to go, but I thought it was going to go at least this far. Now, I drew this leg length. I think we gathered that leg length from down here. From here to here was that leg length. So I said from here to here is what I thought it was going to do. And it did that. And if you take that leg length and you carry it forward, and you carry it forward again, all the way over to there, okay? And then you carry it forward the other way, the leg lengths down. You can see that it was a pretty consistent length of move that it was doing again and again. Now on the gold today, we had just a few trades. Our very first trade here, I messed up this very first trade. I got in it and I moved my stop to break even, and it took me out. And so I was out at break even, and then I thought I was being a little aggressive. I wasn't paying close enough attention. I thought I was being too aggressive taking my stop out. So I got back in, but I got back in at the wrong point. And then it pulled back down, stopped me out to the tick right here on the second time that I got in. So I should have been out of it anyway, but I got back in and it stopped me out to the tick, and then it ran up and it stopped me out. It stopped me out to -10, then it ran up. And then we got in while it was still running up, because you can see the ribbon was all blue and spread out the whole way through here. So we were able to just get in again in it's part of the same leg length, actually. We were able to get in again, and I picked up 1 tick after we got in the second time. So that put me, I was at -10, then put me at -9, and then I got in again. I got another 2 ticks, and that put me at -7, and that was where I ended it with gold. Okay. It was, the gold was just on a tear. And if you look at this on the 30-minute chart, you'll see we had huge candles right here. And this candle, when it was printing, this was huge. You had no idea that it was going to end up here at 1842 and pull all the way back down to here. But in the bigger picture of the things, from here to here, we're at about 50% retracement of that right now. So it wouldn't surprise me to see gold take off and move up and get all the way back up here by the end of the day. But anyway, for us, that was it for gold. During the break, during our moment in time, there was a nice trade right here, another trade right in here, and then that was it. This was at the end of the session. We had red off for red right here, but we weren't really in good context to take that because we had, it was kind of mixed up in here. We could have taken that, but we didn't. Some people did, I didn't. That worked out to be a really nice trade. Then in here, it turned to blue and just got sideways. So there was nothing else on the rest of the morning. The crude oil, we started out in here on crude with this trade right here. Our first trade on crude, we picked up 6 ticks right there, and that was all we did on crude. So I guess we didn't have another trade there the rest of the day. In here, this was our moment in time. During the moment in time, we were on this bar right here, and I said I thought it was going to go up to this level and then pull back. And then we had drawn in this level already. We were thinking it was going to get up to, and it did get up to that. And it really didn't give us anything else. There was one trade in here that I missed right here that I should have gotten, but I missed it. And since then, there was one blue off of blue right here you could have taken. And that was it. That was it. All right. on the ES. Now the ES was, look, I was right. I didn't take another trade that whole hour, that whole last hour. I didn't take another trade. I was suspicious of myself. All right, so right in here, we stopped out again to the tick on the ES right here. Our first trade was a -10, then we had a break even, then we had a +10. That put us back to 0 right there. All right, then we had a red off a red in here that we took was a break even. Then we took a short right in here that gave us 4 ticks in profit. Then we had a break even here, and then we grabbed this trade right here. We got 19 ticks on. That's where we got the goal for the day. And that was pretty much where we ended trading for the morning. We did the moment in time, and during the moment of time, I thought it was going to get up to this level. Dwayne had actually given us this level, the 74 level here. He had given us that level, but he had given it to us when price was back here. He said, you know, when it started this move up, he had given us a couple of levels on the way up, and that was one of them. And you can see it did eventually get all the way up there. And we were looking at it again while it was over here, and it was giving us this look down here. We were looking at it again for possibility to move up. But during the moment in time, we really didn't end up with anything. It got really flat through here. At the end of the session, we had this red off a red right here, but we really didn't have any context with it. It did work out if you took it, but I didn't take it. Then we got into the rest of the break, and it was just a bunch of chop. There's one trade right here that you could have taken if you wanted to, but again, you're in some chop here. So it was kind of messy trading. We did manage to get the goal for the day and everything else, as we usually do, just by following the rules, sticking to the rules. All right. So today, again, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 27th day of December, 2022. Made 6 ticks in crude. We lost 7 ticks in gold, and made 23 ticks on the ES. Put us at 277.5 on the morning session. Today it took 52 minutes and 10 trades to get to the goal for the day. And at that point, we're at 277.50, and we took a total of 10 trades altogether this morning. And that puts us at, hang on, let me see. Joy, I haven't seen you in a long time. And that puts us on the month at $11,820 a contract. That's over 17 trading days, averaging $695 per contract. On the year now, we've gotten our goal in 243 out of 243 days, and we've gone 304 days since our last negative day in the room. And that day was a blue day. We got our goal that day, but we ended up giving it all back. On the year now, we're at $237,166, averaging $975 per contract per 2-hour business day. George, since you're in there, I haven't seen you in a long time. I wanted to show you something. I just want to show you something in a minute here. If you were to quit trading when you get your goal for the day, and you were to add 1 contract per month, so far this year, you would have ended trading 12 contracts in December, adding 1 contract per month. You had to earn $2,000 per contract per month to work your way up to the next contract. And given that there's 20 days, and pretty much every month is 20 business days, and the goal is to get $100 per contract, you would earn $2,000 per month per contract if you're consistently profitable and getting your goal every day. All right, just math, just going through the details. But anyway, on the year, you would have only had to work 44.08 hours if you quit trading when you got your goal, and you did everything just like I did. And you would have averaged $4,765 per hour. Now, that does not mean you're going to sit down and make $4,765 every hour that you trade. What that means is, so far this month, we've gone 328 minutes. That is 8 hours. Is that right? Divide that by 6. No, that is 5.5 hours. 5.5 hours. 5.5 hours. And in 5.5 hours, we're at, is that right? 328 divided by 60. Yeah. In 5.5 hours, we're at $26,550 with 12 contracts, quitting when we get the goal for the day. All right. So that's, right now it's about $5,000, a little better than $5,000 an hour that we've been, the rate we've been at this month. That's what that means. Okay, you quit trading when you get your goal for the day. Right. Now, if you have not taken a trial with us, go here to mytradingiq.com, George. Go here to mytradingiq.com, and right here on the homepage, I mean, I know you're already a partner, but I'm just putting this up. Sign up via free 5-day training right now, 9:30 to 11:30. That is Eastern time, 9:30 to 11:30 in the morning. And if you're going to sign up for the trial, you should just sign up for the trading platform. All right. Download the trading platform, click this, and get this at the beginning of your trial, because we hate to see at the end of the trial saying, oh, I wish I downloaded the platform earlier. And that happens way too often. So download the platform at the beginning of the trial. If you need help with it, ask us. We want to help you set that up. Okay, we want to help you set it up. So don't be afraid, don't be shy. Ask us. We will do it for you. I mean, I'll set up a meeting with you, and it usually takes me 5 minutes to set up a trial, to set up a platform. Any of the platforms, it takes me like 5 minutes to set them up. So no, I can do multiple platforms. You just gotta let me know. All right. Let us know. You can email support@mytradingiq.com. Just let us know you want to set it up. All right. Once you do that, the trade rules are right here. Very simple. Couple step process. Follow those rules. That's what I do with all the trades that I do here, all the trades that I just discussed. Followed all those rules. All right. You can watch these videos of me following those rules in real time during 2022 at various times. Okay. You should do that. All right. That's it. With that, oh wait, I was going to show one more thing. Wait, George, wait a minute. I want to show one more thing, and then I got to set up for the next 2 meetings that I have coming up. This, that's not what I want to do. Let me get rid of that too. This is the NQ, but let's look at it on the ES. Okay, and this is the 10 range. So the idea, if the ribbon is in the red, then pretty much any down close. If it's a bounce off the BBC and it's red and the ribbon is in the red, you can take it. If you get a down close and the green line down here, now this is not your normal slingshot. This is the ultimate slingshot. It's not your normal slingshot. If you get a down close and the green line down here is flat or going down, then you can take that. All right. Now, another thing that I did to help everybody to even simplify it more that I'm looking at right now anyway, this is the S1. The white line is the S1 fast. Whereas in the old slingshot, the S1 fast is a green line. This green line here is a brand new thing. If this one crosses from outside, overbought or oversold, crosses the green line, and you have the BBC is in the right color up here, then that's usually a very good trade. Like right here, the white cross below the green. You had the down close right here at the same time. Bing. And this is a 10 tick range. So these are 10 tick bars right here. Just wanted to show that to you because I know you haven't seen that. Anyway, that is it for now. All right. With that, guys, I'm going to wrap it up and we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Wayne, if you are ready.
I am.
Excellent. Okay.
I am ready indeed. Okay, recap of the recap.
The recap today, it took 52 minutes and 10 trades to get to $277.50.
Good job.
Thank you. Thank you.
All right, guys, I'm going to switch it up a little bit today. Valerie's still working on the recap, which is looking pretty good. So, normally we go to the Logic 247 recap first, and then the concierge numbers, and then the headlines. But so she's not pressured to get the recap done. I'm going to tell you 10 things that you need to know today, December 27th of 2022. Number 1, courtesy of The Hill and The Guardian, President Biden has ordered federal assistance for New York State as of late yesterday, following the weekend's devastating winter storm that left at least 27 dead and thousands without power in the Buffalo region. Our thoughts, our hearts, and prayers are with the families of those who were lost in this worst ever storm, I'm told. Now, I know we've spent a lot of money protecting the power grid in Ukraine. we really, and we know what happened last year in Texas, so, we really should be focusing some of our resources on our own power grid here in the U.S. I mean, I would hate to think that it takes 27 dead people to get that idea on page 1, but moving on. The President shared that his and the First Lady's prayers are with the people of New York and all those who lost loved ones. New York Governor Kathy Hochul declared a state of emergency in New York last Thursday, ahead of what authorities have deemed the blizzard of the century, which buried the region under as much as 49 inches of snow, with more potentially on the way today. At least 60 people have died due to winter storms nationwide, with experts expecting the death toll to rise as search and rescue operations continue. Hochul said, "This is a war with Mother Nature." No comment required. Number 2, courtesy of the New York Post and the New York Times. New York Congressman-elect George Santos admitted to embellishing parts of his resume in a Monday interview with the New York Post, conceding that he'd lied about graduating from college and that he'd made misleading claims about his employment. Santos, who previously misrepresented his Brazilian-born grandparents as Holocaust refugees, also attempted to clarify his ancestry. "I never claimed to be Jewish," Santos told the Post. "I am Catholic because I learned my maternal family had a Jewish background. I said I was Jewish." Santos, the first openly gay, non-incumbent Republican to win a House election, will represent parts of northeast Queens and northern Long Island, and was the subject of a New York Times investigation earlier this month that claimed his resume may be largely fiction. To the Post, he further admitted that he did not graduate from any institution of higher learning, and characterized his campaign biography, which falsely said he worked at Citigroup and Goldman Sachs, as, and I'm doing air quotes here, a poor choice of words. Yeah, anytime it's not the truth, I gotta agree that's a poor choice of words. Added Santos, "I own up to that. We do stupid things in life." Well, the only good part to come out of that is the fact that what he said at the end, "I own up to it. We do stupid things in life." I think our world would work so much better if when people made mistakes, they would just say, "Hey, I screwed up." Or when asked a question that they don't know the answer to, instead of fabricating some kind of alphabet soup garbage, just say, "I don't know." But unfortunately, people don't always do that. So, number 3, from the BBC and CNBC, inbound international travelers to China will no longer be required to quarantine for 2 weeks upon arrival, marking a major move away from the long-held zero COVID policy by Beijing. Beginning January 8th, international travelers will only be required to show a negative COVID test result in order to enter the country, effectively ending the 3 years of intense and intensely criticized restriction imposed by China's president. How many people who used to straddle the borders had to change their life plans? How many families had been separated and barred from seeing their loved ones for one last time? how many 3 years do we have in our lives? That question was posed by a Chinese journalist on the social media website Weibo. The news, which involved China's health authorities downgrading COVID-19 to the less strict Category B designation, was positively received by the markets in Asia, with the Shanghai Composite rising 0.64% and the Shenzhen component rising 0.85%. Number 4, NBC News and the Wall Street Journal. On Monday, Southwest Airlines canceled more than 2,800 flights, or about 70% of its schedule, stranding thousands of customers on one of the busiest travel days of the year. According to Southwest CEO Bob Jordan, in all likelihood, we'll have another tough day tomorrow as we work our way out of this. Adding, this is the largest scale event that I've ever seen. Though the cancellations followed nationwide disruptions due to the weekend's major winter storms, Jordan warned Southwest employees on Christmas night that the airline had a lot of issues in the operation right now. The Department of Transportation slammed Southwest for its disproportionate and unacceptable rate of cancellations and delays, with one customer telling NBC News, "I'm angry as hell because I see mismanagement." He'd been stranded at Chicago's Midway Airport for 2 days. Number 5, from the Associated Press and The Week. 4 electrical substations were vandalized in Washington State on Sunday, according to the Pierce County Sheriff's Office. Tacoma Public Utilities reported that 2 of its substations were vandalized on Christmas morning, with outages affecting roughly 7,300 customers southeast of Tacoma. Around noon on Sunday, Puget Sound Energy reported that one of its substations was vandalized at about 2:30 a.m. and nearly 7,700 customers had lost power. The 4th substation was vandalized shortly after 7 p.m., with emergency dispatchers receiving a call about a fire at a Puget Sound Energy substation in Graham. All of the substations are in South Pierce County. Sheriff's officials said in each case, someone broke into the fenced area around the substations and damaged the equipment in order to cause a power outage. Over the last month, there have been 6 attacks on electrical substations in Washington and Oregon. In early December, tens of thousands of customers in Moore County, North Carolina, were without power after someone opened fire on 2 substations, damaging the equipment. Number 6, from the Associated Press and the BBC. South Korea's military expressed regret on Tuesday after it failed to shoot down 5 North Korean drones that crossed the shared border on Monday. Though Seoul mobilized helicopters and jets to shoot down the drones, one of which flew near the nation's capital, South Korea failed to bring any down in the 5-hour pursuit. Our military's lack of preparedness has caused a lot of concern to the people. That, according to a senior military official, Gene McKenzie, the Seoul correspondent for the BBC, said the incident is especially concerning because the drone that flew near Seoul had the potential to run surveillance operations and to photograph sensitive areas. And you can practically shoot those things out of the air with a BB gun, but it is what it is. Number 7, from Fox and the New York Post. A Spokesperson for Mike Pence said Monday that the former vice president has not filed for a 2024 run with the Federal Election Commission, despite headlines in Britain's Sky News and the Washington Times claiming otherwise. Former President Mike Pence did not file to run for president today, according to spokesman Devin O'Malley. That was on Twitter. When asked if someone had pranked him with a fake FEC filing, O'Malley replied, "I think someone pranked you." The FEC declined to comment on the statement of candidacy, which was filed at 5:12 p.m. Eastern on Monday. A U.S. federal holiday under the name Mr. Mike Richard Pence. Fox News reports that previous FEC filings for Pence listed his first name as Michael, not Mike. Rumors have swirled about Pence's 2024 plans after he previously told news outlets he believes American voters will have better choices than Donald Trump in the next election. Number 8. Iran grounded an international flight traveling from Tehran to Dubai on Monday in order to prevent the wife and daughter of soccer legend Ali Dai, which I probably mispronounced, from leaving the country. Dai, 53, is one of Iran's most famous footballers and a former German Bundesliga striker whose 109 goals at the international level were long unsurpassed until Cristiano Ronaldo overtook him. Al Jazeera reports, and he has spoken in support of the protests that have engulfed Iran following the death of Masa Emini earlier this year. Dai said his family was going to Dubai for a few days trip and back prior to the Mahan airplane being rerouted to Kish Island in the Persian Gulf, where they were removed from the flight. Tasnim, an Iranian news organization with ties to the Revolutionary Guard, alleged Dai's wife was under a travel ban and that her intended final destination was the United States. All right, guys. Give me 1 second here. I'll put you on hold just 1 second. Alright, I'm back. Number 9, from Fox Business. Holiday sales rose in 2022 despite big downward pressure on spending. Number 10, courtesy of The Wrap. Americans braved sub-zero temperatures and knee-high snowbanks to see Avatar, The Way of Water, which grossed a stronger than expected $29.5 million on Christmas Day. Wow. The numbers put director James Cameron's film on track to be the 4th biggest Christmas box office ever, behind 2015's Star Wars The Force Awakens, which brought in $49.3 million, and then 2019 Star Wars The Rise of Skywalker, and 2021 Spider-Man No Way Home. The Avatar sequel, already near $900 million in total worldwide grosses, is expected to cross the $1 billion mark by New Year's Day, at the latest. The Wrap adds with the film's 40 holiday weekend total revised to $90 million, though Cameron hasn't revealed how expensive Avatar 2 was to make. He previously called it very expensive and claimed it needed to be the 3rd or 4th highest grossing film in history just to break even. Wow. And that's 10 things you need to know today. All right. I got a message from Valerie here. Okay. All right. Let me see if I can revise this and fix it. All right. Logic 247, our 24/7 around-the-clock Emini alert service, which includes crude, gold, silver, bonds, and the euro. We're in week 230. Last week was week 229. Since we launched Logic 247, officially launched after the beta test, we have now issued more than 13,000 individual handcrafted alerts. It was last night that we broke the 13,000 mark. And over those 13,000 plus alerts in 230 weeks, we've averaged 20% or less of those alerts being stopped out, based on not risking more than $300 per contract per trade, less when possible, based on market structure, and a simple 3-step process we teach all of our passport holders in private one-on-one mentoring sessions. As a passport holder, our members have access to unlimited one-on-one private mentoring sessions. Now, since the markets opened last night, they were not open Sunday night, they were not open Monday, as we often see on holidays, but in fact, the markets opened for business last night at 6 p.m. Eastern. Now, Logic 247 runs around the clock, because futures trade around the clock and we have traders around the globe. So an alert could come out at 2 a.m. or 2 p.m. It just depends upon when opportunity presents itself. Since the market opened last night, we've issued a total of 30 alerts, 2 never triggered, still waiting on the outcome of 7. That gave us 15 actionable alerts, of which 1 or 7% would have been stopped out based on not risking maximum risk profile I just explained that we teach all of our members in one-on-one mentoring sessions. If you don't book the session, I guess you'll never learn. Now, the hallmark of a great week is, of course, that we are at 20% or less being stopped out. We're sitting at 7% right now. 15 actionable with 1 stop out. And of course, we've still got 7 waiting. Now, for anybody that's new and does not understand what a Logic 247 alert is, let me show you. Last week we ended up with week 229. We had 105 total alerts issued, 18 never triggered. We had 85 actionable alerts, even though we were closed Friday. So that's a 4.5 day week because we start Sunday night. Of those, 12 or 14% would have been stopped out based on that risk profile I just explained. And again, that is a maximum risk profile. Okay? You don't want to risk $300 per contract per trade if it's not necessary. And the chart will clearly tell you where your stop loss needs to be. Also, the alert itself will tell you what the maximum profit potential is in the trade. You never, under any condition, want to risk more on a trade than what the potential profit is. And although these alerts represent some huge numbers, I feel compelled to remind you that all you need is simply 2 points a day in the S&P or the equivalent in any of the other markets. 10 ticks in gold, 10 ticks in crude. The 2420 blueprint will walk you through the process. Up number 1, getting ready to go live. You don't become a passport holder and just start trading live. No, you follow the blueprint. You put together 10 consecutive days in a row in SIM before you even think about trading live. That's 10 consecutive days where you reach your goal in 10 trades or less. Until you do that, you don't have a firm understanding of the strategy, and so you shouldn't be trading real money. And sometimes people go, I've been trading for years. Profitably? Well, you know, I have my good days and my bad days, and good years and my bad years. Now, actually, no one ever says that. It rarely gets beyond a good day. Sometimes a couple of weeks, and then in one day, one session, it all evaporates. It doesn't have to happen. Which is why we do everything in a very organized and methodical manner. So, in your demo account, you are preparing to trade real money. It doesn't matter how much real money you've traded and lost in the past. You're learning a new strategy. You're learning how to interpret the indicators. You're learning how to use the multiple time frames, the concierge trade alerts, the logic alerts, the price action in front of you, the indicators, all of that, so that you can make well-informed, high probability, low risk trade decisions. So last night began week 230. Nice graphic, Val. The first alert. Well, this is logic. We'll go to the CTAs in a minute. And they are different. The logic alerts are based on current price action, but there's time built in to study the alert, study the 30-minute chart, and bring up your trigger chart, which for most people is a 7-tick range chart. The purpose of the alerts is not so that you can just trade the alerts and make money without ever having to learn how to trade, although I know some people do that, but the day will come that they regret that decision. Because our goal for you is that you become self-sufficient. That you reach a point where you no longer need someone to tell you when to get in and when to get out. As a lifetime member, you have lifetime access to the indicators, to the weekly trading zones, to the logic alerts, concierge trade alerts, unlimited one-on-one mentoring, and the live room. It's for life, with no recurring fees, no upsells, no new shiny objects to buy, no nonsense. We will never insult your intelligence in that manner. So, coming out of the gate, we had a long on the ES. B means buy. T is initial target. The initial target is designed to help you get your goal for the day. Okay, if you're following the program and you're just looking to get your goal for the day, and then learn the self-discipline of putting the mouse away, you don't need to go any further than that. Then the next target, or potential resistance, because it's long, was at 39.02. And then the final trade to target on a long alert will always be the weekly trading zone above. On a short, it will always be the weekly trading zone below. And so the first move up from 92 was to 94.25. So here's your goal for the day, right there. And then ultimately we pushed on up to 3,900 and a half. Now, if B stands for buy, guess what S stands for? Sell. Because there was a substantial gap last night when the markets opened on the ES, we issued a gap fill alert to be short at 38.76. Initial target 38.74. Once again, that's your goal for the day. And the potential support at 38.69. And at the time the recap was done, price had dropped to 38.75. Okay, a few ticks away. Then we had a long on the Dow. Buy, initial target, second target, third target, final trade to target. On the Russell, it was a long from 1785 to 1787. It's your goal for the day. Put the mouse away. You see, the idea, there's two ways to go about the whole business of trading. You can try to trade every move the market makes, and you can try to wring every tick possible out of a move, or you can do it the simple way, and that's to become consistent at taking just 2 points a day out of the S&P, or the equivalent in any other market, like 10 ticks in crude, 10 ticks in gold. Those are all $100 a day per contract. Of course, you can't live the lifestyle you want to live, or probably even pay your bills on $100 a day. So what the blueprint does is, once you've put together those 10 consecutive days in a row in SIM, it gives you the green light to go live with one contract after you've done the 10 consecutive days in SIM where you reach your goal in 10 trades or less. Once you go live with one contract, your goal is to increase your account balance by $2,000. Then the blueprint will give you the green light to add a second contract. The big difference between the first and second contract is the first contract is funded with your startup capital But if you follow the blueprint, the second contract is funded with profit you earned in the market. The blueprint's going to tell you when it's time to add number 3, contract number 4, number 5, number 10, goes all the way up to 20. By then, you got the hang of it, okay? That's why it's called the 24/20 blueprint. It's designed to help you go from 1 to 20 contracts over a period of 24 months. Now, 2 points in the S&P, or the equivalent in the Dow, or the equivalent in the Russell, it's $100 per contract traded. But once you add that second contract with profit you earned in the market, now the same 2 points are worth $200. And as you work your way up, and now you're trading 5 contracts, the same 2 points are worth $500 a day. And as you continue to work your way up the ladder, if you choose, some people are comfortable making $500 a day and just want to leave it at that. You should never feel compelled to increase your trade size just because the blueprint says it's okay to increase your trade size. If you choose to work your way on up the ladder to 10 contracts, the same 2 points that used to make you $100 a day now make you $1,000 a day. And that's simply a function of math. It has nothing to do with our strategy. Our strategy comes into play when you learn to be consistent at taking those 2 points a day out of the market. Or 10 ticks in crude, or 10 ticks in gold. You get the idea. There's the hard way and the simple way. We choose the simple way. But if you want to do the hard way, when you book your one-on-one mentoring session, I'll teach you what you need to know to do it the hard way. But I'll always remind you that there is a simple way. So on the S&P, the Dow, and the Russell, you were able to get your goal for the day. The NQ long never triggered. When you see the Z's, that means that one didn't trigger. Then we had a long on gold from 80.95 to 81.05. That's your goal for the day. Put the mouse away if you're trading gold, or crude, I'm sorry. Then there's gold, and then there yields 18.15 to 18.16 to the weekly zone at 18.19/20. Well, we made it to 18.19 and a half. But your goal for the day was right here. A $1 move in the price of gold pays $100 per contract traded. Silver. The idea here is to buy 24.25, and at 24.27 you're done for the day. But price continued to rise to the second target, to the third target, and at the time the recap was done, it was 1 penny away from the fourth target. And then the euro, there was no trigger there. That was a long as well. Then we had a short on bonds, which provided your goal for the day. And then we had a long on the euro, which provided your goal for the day. And then some. Now, those were all last night. From 12,995 through 13,005, and then this morning out came alert number 13,006, which was a hedge on the NQ because, as you recall, the long NQ never triggered. Being short to the initial target on the NQ is actually worth $200 per contract traded. Why? because the NQ is very volatile. So you're typically going to need a larger stop on the NQ than you do on the other indices. And of course, you can use a fixed number as you see each day in the live trading room, or in one-on-one mentoring sessions, you'll be taught how to use market structure to determine where your stop needs to be so that you don't risk more than you need to and you never exceed the maximum risk. Again, that's per contract traded. So from 64 to 54 to 44, that's $200, $400 per contract traded. Still waiting. Here's a short on bonds from the entry to be short to the initial target, goal for the day. It dropped a little further. And then we had a short on the Dow this morning. And again, there's your goal for the day at 435, and at the time of the recap it had dropped to 415. On the Russell, short at 1775, initial target at 1773, goal for the day. Now, I don't know how many times I've told you that there was an alert available to you as a member or a trial member that would allow you to get your goal for the day. You see, that's why it's so tempting for people to just trade the alerts and not worry about learning how to trade, because Dwayne, he'll just keep cranking out those alerts and I'll just keep trading them. But do you really want to be dependent on somebody for the rest of your life to tell you when to get in and when to get out? Because you can learn to see the markets the same way I see them, the same way Michael and Valerie and Bert see them. You can learn to make your own decisions. It's quite an opportunity. Now, a lot of courses teach you a theory or some kind of strategy or methodology, but they aren't giving you trades at the same time. You know, some places may give you trades. I don't know if they have this type of results or not, because I don't receive those trades. But they don't tell you how they created that trade. They don't explain to you in depth and in detail why this was the entry, why this was the initial target, why this was the second target or the third. So we give you all of that. Everything a trader needs, all under one roof, one low price. So we had a short on silver, goal for the day, short on the euro, goal for the day, still waiting, still waiting, still waiting. Red X means a stop out. And then we got a long on crude, long on gold, long on silver. Now, some of these may have triggered. Valerie's out of the office at the moment, but when she gets back, she will update this, and there will probably be more alerts this afternoon and, of course, this evening. Again, the logic alerts come out around the clock, and they are based on current price action, with time built in for you to study the alert, study the charts, so you learn how to do it yourself and not depend on anyone else. Now, the concierge trade alerts, those were our original alert service going back many years. The CTAs are issued shortly after the Globex Open. Globex opened last night at 6 p.m. Eastern. This static report was published at 6:15 p.m. Eastern for members and everyone taking the free trial. You should think of the CTA numbers as a target first and entry second. Once price trades above or below a CTA number, it will most likely trigger multiple times. It's far better to get your goal for the day on the way to the CTA number. So that brought a question up last night, which basically said, I don't really understand what that means. So let's do this. Let's jump over here to the alert trial discussion group. Let's see, where did that question come in? Question on the quote of, once price trades above or below CTA, it will most likely trigger multiple times. It's far better to get your goal for the day on the way to the CTA number. Can you expand on the part of this statement that confuses me? If I'm waiting for a CTA level to be hit in order to possibly trigger a trade, how can it be better to get the goal before the trigger is hit? Well, the answer is because you already have your goal for the day before price gets to the CTA number. So I explained it every day on the afternoon broadcast. Think of the CTA first as a target. In other words, if price gets above the 30-minute BBC, then find a long trade on your 7-tick range chart as taught in the live room every day. If price gets below the BBC on the 30-minute chart, look for short trade setups on your 7-tick range chart until price reaches the CTA number. That's getting your goal on the way to the CTA number. I'll cover it tomorrow, again on the afternoon broadcast, but you can watch it on our YouTube channel, youtube.com/CFRN. When you go to our YouTube channel, there's some tabs at the top. Click the Live tab, and it will give you every daily broadcast in chronological order, going back 2100 daily live broadcast. And just fast forward to the part where I start doing the recap of the numbers published the previous evening, and or book a one-on-one mentoring session. If you have additional questions, post them. Okay, so here's an example, okay, of getting the goal for the day on the way to the CTA number. I'll blow it up so you can see it a little better. Textbook example just happened on this candle. This candle opened. Remember, the alerts came. This is a 30-minute candle. This was the opening candle. It was halfway through the life of this candle at 6:15 that the CTA numbers were published. And so when the next candle opened and started moving higher to 38.94, that's where you grab your 2 points for the day. And then whatever happens after that, it's not relevant because you already got your goal for the day. 38.8975 was the open of the 30-minute candle right here, which provided the goal for the day on the way to the CTA number 38.94. The cart before the horse stuff has to do with going live before you learn the strategy and how to read the indicators in proper context. Stuff I've already talked about today. Putting together your 10 consecutive days and going live with one and then adding your second one when the blueprint says it's okay. But only adding one at a time with profit you earn in the market. If you have the self-discipline to stick to that formula, it makes it, more difficult to blow up an account. Real difficult. Unless you break the rules, and if you break the rules, then you're not following the formula. Okay? So I've already covered all of this. Dow also provided the goal for the day on the way to the CTA. This candle right here. The Russell did the same thing. Now here's crude. Once the CTA number is pierced at 80.75, it becomes an entry and ran up 31 ticks, or $310 per contract traded. Now that the CTA has become an entry, there's a greater probability of it being triggered multiple times. When we go to the live charts, you'll see that. Along with that, the journey back to the CTA number from here, or wherever price finds support, will most likely offer the goal for the day again. And we did have a pullback, and we'll see what that looks like on the live chart. The good news is the same patterns repeat themselves over and over, day after day. Eventually, you can just scroll through the charts, spot the market that is currently offering opportunity, grab it, and be done for the day. Now, if you're brand new to trading, then of course it's intriguing and you really want to spend some time looking at charts, and that's fine. There's nothing wrong with that. But if you've been staring at charts for a while, it's time to stop staring at charts all day and go live the life God created you for. Just, get up, go through your morning routine, whether that's coffee or prayer, or whatever. Because I'm the only moderator logged in, I can't log out and log back in. Otherwise, the folks on YouTube would lose their connection. You can, however, go to youtube.com/CFRN, where the audio is pristine. And I will speak to my staff and make sure that tomorrow somebody remains logged in, so that I am actually capable of logging out and logging back in when the go-to audio drops, as it seems to do repeatedly here of late. So, go here, and the audio works just fine. Moving on. The good news is the same patterns repeat themselves over and over, day after day. Eventually, you can just scroll through the charts, spot the market that is currently offering opportunity, grab it, and be done for the day. Once you get to that point, there's nothing else you ever have to learn about the markets. I mean, there's all kinds of stuff you can learn about the markets. But ask yourself, with all the time and treasure you've invested over the years, did any of that stuff make you consistently profitable? I'm going to guess not, because you ended up here. So, all you need to learn, you don't need to learn about the trend or the tricks or the calendar bands, and I'm not knocking any of those things. They all do what they were created to do. But if your goal is to simply take 2 points a day out of the ES or the equivalent thereof, well, guess what? You don't need to learn all that other stuff. It's not going to make your 2 points any better. It's not going to make them taller. It's not going to make them better looking. But if you can become consistent at that, then earning more money is simply a matter of adding more contracts with profit you earned in the market. If the current pullback on crude reaches Friday's closing price, then the opportunity back up to the CTA will be over $1,000 per contract traded. If the pullback fails to hold, then trade it the same way, just on the short side. And so, as you can see, we pulled right back to the BBC. Here's Friday's close. When we go to the live charts in a few minutes, we'll see what happened. Last night on the euro, 1, 2, 3, 4 triggers. And go for the day. This is what the daily chart looked like last night. And so now we're going to go back to the concierge trade alerts so that anyone who wants, if you're not a member, if you're not on the trial, feel free to grab a screenshot. Now remember, this static report was published 15 minutes after Globex opened. Globex opened at 6 p.m. Eastern. The CTAs came out at 6:15. Now once published, these numbers are good for the entire session until the next set of numbers come out the following evening. Just like the weekly trading zones. Once published Monday morning for our members at 6:15 a.m. Eastern, they're carved in stone for the entire week. They don't change in any way whatsoever. Carved in stone. Now, we've published the weekly trading zone since December 14th of 2009. So we have over 13 years of data that tells us exactly how price behaves around a weekly trading zone. And in markets filled with infinite possibilities, only 3 things happen at a weekly trading zone. Consolidation 70% of the time, rejection 20% of the time, the slice 10% of the time. Now when we go to my charts, you're going to see last week's zones because the alerts issued last night were based on last week's zones. That's how it works every week. The new zones became available this morning to members and trial members at 6:15 a.m. Eastern. That's so you got plenty of time to get them on your chart before Wall Street even wakes up for the day. Okay? The zones, you should put those on your 30-minute chart, because on your 7-tick range chart, sometimes they won't show up properly. That's why in the trading room you'll see Michael flipping back to the 30-minute chart occasionally. Okay? And you can see the zones on this 30-minute, but you can't always see them on the 7-tick range. That's why whatever market you're trading, you should have a daily chart, you should have a 30-minute chart, and you should have a range chart or 5-minute chart, whichever you're most comfortable with, to actually execute the trades on. Okay. Each market has 2 numbers. So what do you do with these numbers? First thing you do, we'll use the ES as an example. Okay, apparently some people didn't get the memo, so I'm going to give you the memo again. Because I'm the only moderator logged in, I can't log out and log back in. You can, however, go to youtube.com/CFRN, where the audio is pristine. Okay. Now, using the ES as an example, when this report is published, and it's published both for members and trial members, you want to note on your 30-minute chart where price is at this time. It's going to be between these 2 numbers. If price gets above the 30-minute BVC and starts trending up towards 38.94, that's bullish. So our strategy will look for opportunities to be long the market. On the other hand, if price gets below the BVC and starts trending down towards 38.50, that's bearish, so our strategy will look for opportunities to be short the market. In either case, that's where you use Logic 247 and everything you learn in the live training room every trading day. To yourself, find opportunities to be long or short the market and get your goal on the way to the CTA number. Each market that you trade, and if you're new, you shouldn't try to trade them all, okay? Just pick one and get consistent with that. Then maybe 2. Draw a line in the sand at 38.94, draw a line in the sand at 38.50. You'll see what my lines in the sand look like in just a minute. If you don't have the numbers, you want to grab a screenshot because you're not a member on a trial, go ahead. It'll make more sense to you as we walk through the numbers. Although I've clearly drawn a line in the sand at each one of these spots. Okay? Very good. Where are we on the daily? Why do we start with the daily? Because institutions, hedge funds, the Goldman Sachs of the world, they move price. Not we lowly retail traders. Okay? Size matters. These institutions I speak of have accounts denominated in hundreds of millions and billions of dollars. Whereas a retail trader's account is typically denominated in thousands or tens of thousands of dollars. So institutions can withstand a much deeper drawdown than you or I, and they can remain with a profitable position longer than you or I. By looking at the daily chart, you're looking at what the institutions are looking at. They look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Okay? We obviously have had a bearish cross. We've come down to the 38% fib extension. First price came to rest here at the 38% reverse fib. We've been in a downtrend since March 29th. The low of the downtrend was put in on October 13th. And just as Michael does up, down, on the 7-tick range in the morning, it's the same thing. Markets are fractal in nature. Now, what does that mean? People say it, but nobody knows, people say it just because they heard somebody else say it. Oh, markets are fractal in nature. What does that mean? It means price flows the same across every market and every time frame. Now, that's a huge statement. If you've never heard it before, you better write it down. It could change your life. Price flows from support to resistance, back to support, back to resistance, back to support. Over and over, it's a never-ending cycle. It's been in existence since the inception of the markets. It will continue until the markets cease to exist. It is how markets work. Why hasn't anyone else ever told you that? Because they got all kinds of stuff to say. We got a passport, lifetime membership with no recurring fees, access to everything we do, everything we've ever done, whatever we do in the future. So we don't have to pull any punches. We don't have any secrets, okay? You simply have to take advantage of the resources that are at your disposal when you become a lifetime member. So, if institutions are what actually move price, then it's worth spending 2 minutes before you start trading to see which way the institutional wind is blowing. Whether it's the S&P 500 or the Dow or the Russell, the NQ, crude, gold, silver, euro, bonds, doesn't matter. Crypto, Forex, individual stocks, Amazon, Walmart, eBay, whatever. Price flows the same across every financial instrument and every time frame. That's a market truth. Now, price managed over the last, this is today's session, that's Friday, that's Thursday. On Thursday, price managed to drop all the way to the 24% reverse fib. And as we were talking all last week, we said when price reaches a major fib number on the daily chart that the institutions are looking at, you're going to see a substantial reaction most of the time. And so from the 24% reverse fib, price found support literally to the tick, and by the end of the session had bounced from about 37.86 to 38.45. See, it came all, this was a big red candle all the way down to the 24% reverse fib, where it found support. And this was truly important because, as you can see on this last move up, when price did its pullback, see, leg retrace, leg retrace, leg retrace, but this retrace got us back above the BBC, and so now it becomes leg retrace, leg retrace, leg retrace in the opposite direction until price gets back below the BBC. Then it becomes leg in the opposite direction, retrace, leg, and as I wrote last night, potential resistance to any up move would be the high of December 22nd, and then the daily BBC, and then the 38% reverse fib. What was once support typically will become resistance, and vice versa. However, we've spent the last 1, 2, 3, 4, 5, 6 trading sessions consolidating, trading sideways at the 38% fib extension. Now, I just walked you through the individual legs, leg, retrace, right? Or you could look at it like this. Leg, retrace, leg. You can drill down to the 1 minute. You can expand out to the monthly. Price flows the same. Leg, retrace, leg, retrace, leg, retrace. And so here we sit, right on top of support at the 38% fib extension. Now, you can buy $20,000 software that draws fibs on your charts for you. Or you can use the free tool that's built into every trading platform I've ever used and draw your own. You know, and save the 20 grand for actual trading. And there's the fib extension tool. So how did I arrive at this number where the market's been consolidating? Very simple. From the swing high to the swing low to the retracement high, 14th century math projects areas where the market is most likely to find support. And it did a beautiful job. You don't need a course in fibs. I would encourage you to Google Fibonacci, which will give you some links taking you to the golden ratio so that you have a basic understanding of fibs. But you'll notice on my 30-minute charts and on my range charts, I don't draw fibs there. They're literally meaningless at that granular level. Okay, they have real meaning when you apply them to daily, weekly, and monthly charts. Stuff like this happens. Price turns on a dime at a fib, because fibs are not proprietary information, whereas our indicators may be. Fibs are in the public domain, okay? And trust me, every institutional trader out there understands fibs and understands what happens when price reaches a fib. The price is dropping. There's the highest probability that the market's going to find support there, like it did, and give you a nice bounce. So we know support's at the low of the day, then the low of Friday, and then the low of Thursday, which was the 24% reverse fib. Resistance overhead is the high of today, the high of Thursday, the daily BBC, and then the 38% reverse fib. Okay. BBC simply stands for bull bear cross. When price crosses below the green line on any market, any time frame, we're bearish. We anticipate lower prices. When price crosses above the green line, any market, any time frame, we're bullish and anticipate higher prices. Below, lower prices. The other indicator, the red and blue indicator, it's called the CFMA1. We got to call it something. And I refer to it as blue and climbing, red and falling. Blue and climbing, red and falling, blue and climbing, red and falling, for reasons that I would hope would be obvious. Blue or green is a bullish color. Red is a bearish color. Okay? So when you've got price above the BBC and blue and climbing, now you should expect higher prices times 2. When price gets below the BBC and you have red and falling, Well, you should anticipate lower prices times 2. Over and over, again and again. And when the black line, which is called the step line, when that crosses red and falling or blue and climbing, it means that there's a potential change coming in the direction of the markets. Just like right up here at this high. See how the step line crossed? And then look what happened. And then before we got to the low here, what happened? Step line crossed. Price pulled up to the BBC. And put in the low of the entire downtrend that started March 29. And then as price got back above the BBC, see how step line, you got price, you got step line, you got BBC. Took us right up to that 38% reverse fit. 30-minute charts behaves the same way. All markets, all time frames. All right, on the ES. We had a gap open last night. Now the vertical line on this chart separates today from Friday, the last day the markets were trading. So we had a gap open. That means Friday closed at the low of this red candle, and then it opened last night at the base of that candle. Okay, and I think Stefan figured it out to be a 9.5 point gap. I didn't even calculate it. Okay, and so then on the way to the CTA, there's your goal for the day. But remember, once an alert triggers, it will most likely trigger again. So we get a trigger, we get a retracement, we trigger again, we get back below the trigger, and trigger again. Okay. See, that's 2 points right there. That little wick sticking up from 84 to 86, 2 points go for the day. However, not all triggers are created equal. That's if you wait around for the trigger. You could have just been done and not have to worry about any of this. Okay, so price triggers again multiple times. This time it runs all the way up to 3,900. This time it runs all the way up to 38.99. But there's an issue. You got red and falling in the picture. Red and falling represents resistance or lower prices. We had an instance here where we changed back to blue and sideways, and then it rolled right over and became red and falling. And when the red line crosses below the green line, that's called a bearish cross. That's confirmation of what price has already told you. So where did price find support? At last week's zone. Remember, these are last week's zones because these alerts were put out last night. And the new weekly zones don't come out until on a holiday weekend. When Monday's a holiday, they come out Tuesday morning. On a typical week, they come out Monday morning at 6:15 a.m. Eastern. And so price came, the zone was 38.36/37. And the swing low was 37.25. Okay. And this area that I highlighted, you see price had gotten below, fill the gap, which is important. Okay. It filled the gap. You got red and falling. And so this area, this rectangle that I created here, that's a 13-point window of opportunity. And then once price, so there's a 13-point opportunity to get your 2 points for the day. And then once price traded through the CTA number, it offered up another 13 points. So to get combined, you had 26 points, of which you only needed to extract 2 points to be done for the day. And then come back and do it again tomorrow. And then come back and do it again the next day. And then come back and do it again the next day. Consistency. If you're the type of trader that has these hot and cold streaks, it's because you don't understand what type of market conditions you're trading in. Now, no matter what market conditions are transpiring on any given day, we don't change our strategy, we don't change our indicators, we don't change anything. We're simply aware of what sort of market we're in so that we trade accordingly, okay? We don't change anything, but we're aware. So price came down to the zone and found support. When price drops to a zone, we expect it to be support. When price rises to a zone, we expect it to be resistance. 10% of the time, when price slices through a zone like it's not even there, what typically happens is it will retrace back to the zone it sliced through and then continue in the direction of the slice, as it did. Okay, that's 10% of the time. 80% of the time, you're going to have consolidation. 70. 20% of the time, rejection. That right there is rejection. After the slice, you had rejection. This was a red candle all the way down. But before the 30-minute candle closed, price had risen all the way back up to create a green candle. So you had a slice followed by a rejection. Okay? And then you had wide-ranging consolidation right here. And once you learn this, there's nothing else to learn. You're done. Now you got to do is just get up every day and do it. Get up and do it. Get up and do it. Get up and do it. Like any other job. On a nice day, you'll be done in 10 minutes, 15, 20. Some days it might take you an hour. Some days it may take as long as it takes. And on those days, you've got to learn how to not be affected. Consistently profitable professional traders don't bat an eye when they get stopped out, because they understand that getting stopped out is as much a part of trading as breathing is a part of life. Let that sink in. They don't waste their time or treasure looking for some holy grail where they'll never get stopped out again and only enjoy profitable trades. They know that's not reality. They know that that not only doesn't exist, but it cannot exist because it would defy the laws of physics, science, even God. So when they get stopped out, they're just thankful they had a stop. It's the cheapest insurance you'll ever buy. Now you go look for the next high probability, low risk trade opportunity. And once you trigger into the trade, you have no control over what the market's going to do. No one does. It's either going to hit your target or your stop loss. And whatever the results are, you're either done for the day or you're looking for the next opportunity. Price looks like it wants to come down through the CTA again. Would that be surprising? No. Once an alert triggers, there's a greater probability of it triggering multiple times than not. So we've already triggered. Would it make sense to trigger again? Yeah. Day after day. Again, there's 2,100 of these recaps on our YouTube channel, youtube.com/CFRN. Scroll back as far as you want, pick any day at random, and just fast forward to the part where I'm doing this recap. You'll see that what I'm telling you is the market truth. And it's like, holy smokes, Batman. Why didn't we think of this sooner? Well, typically vendors don't want to tell you the whole truth and nothing but the truth, because again, that would prevent them from selling you endless arrays of stuff. Okay? The only thing we have is a passport. Take it or leave it. It's just how we're comfortable doing business. Okay? Once price passes through 38.50, where should you expect to find support? Well, the first place might be at 38.47, and then last week's zone. Of course, members and trial members already have this week's zones. On the first day of the week, you do well to keep both this week's zones and last week's zones available. Okay? As the market finds its footing for the week, it will gravitate from last week's zones to this week's zones. The Dow. There we go. So this was the opening candle last night, and the second candle gave you your goal for the day, and then some. And then price finally triggered at 565 and ran up to 579. Then it pulled back. You got red and falling here. Once price gets above red and falling, you do get a tradable trigger. But I would wait until this turned back to blue and climbing like it did here. And from 565 up to 611. Go for the day and then some. Why did the market stop right there? When a bearish cross leads to an extended move, the first time price revisits the area of the bearish cross, it will almost always be good resistance. Same is true of a bullish cross. When price was dropping, why did it stop here? Look left. Bullish cross. There was some pretty strong downward momentum, so it spiked the area just a little bit. But fibs are an area, zones are an area where the bearish cross or bullish cross took place. Represents an area, okay? And as long as you're aware of that area, you won't fall into so many of the traps that so many traders fall into. 9 out of 10 new traders fail, primarily because they don't have a teacher. They don't have a business plan. They don't have a trading plan. They don't even know they need these things. They don't have access to around-the-clock support. They don't have unlimited access to one-on-one mentoring. All of this stuff our members have. The 9 out of 10 who fail don't have that. It's sad. It's no wonder they fail. But it's the truth about trading. So S price triggered and triggered again, and even attempted another little trigger there. Came down, found support at the zone, bounced up to the BBC, and now it's still sitting on top of last week's zone as support. And now you know why price stopped falling here. The chart will always tell you everything you need to know once you learn how to read the chart. Okay, the Russell. This is the opening 30-minute candle, and here's your goal for the day. And then we push through the CTA number from 1785 up to 87.2. That's also goal for the day. Then we get back below, but not all triggers are created equal. Remember, red and falling. So once red and falling turns back to blue and climbing, boom. Now we got a nice move from 85 up to 89.5, 4.5 points. Then price gets below the BBC and it drops. It finds support at the zone, consolidates for a bit, and then it drops, okay? And where does it find support? Right at the zone, to the tick. So on the way down, after that gap fill, from 1771, you had all the way to 1764 to grab your 2 points, and then once price traded through 64, you had all the way to 57 to get your goal for the day. And if you missed this, and you missed this, and you missed this, and you missed this, it handed it to you here, and it handed it to you again here. 64, the low was 59. It's 5 points, $50 a point, $250 per contract traded. It also pays $50 a point, so you only need 2 points, just like the ES. On the NQ, opening candle last night, gap open, okay, run up to the zone, find resistance, pull back into blue and climbing, find support, goal for the day. Then we consolidate along the zone. Remember, consolidation is what you'll see 70% of the time. This is consolidation, okay? And before price could ever get to the CTA long, blue and climbing turned to red and falling. Price got below the BBC. Then we had the bearish cross. The red line got below the green line. When the blue line gets above the green line, that's a bullish cross, okay? And so once that gap was filled at about 11:072, you had a $1,200 per contract drop. And then as price passed through the target, we dropped from 11:012 to 10,896. It's over $2,000. Then we got back above the trigger, did it again. $10,911. It's another. You've got a $2,000 plus move, and then you've got a $2,000 per contract move. That's if you didn't get it here or here. Okay. All right, that covers all the indices. Here's crude. Now, I showed you that chart where price had pulled back to the BBC. We said if price could trade below the low of Friday, then we would look to get our goal on the way to the short CTA, if you didn't get it on the way up when it triggered, okay? 80.75 up to 81.05, that's $300 per contract traded. We pull back to the BBC, and we're just, you know, above the BBC, below the BBC. When you've got this on your 30-minute chart, yeah, it's not fertile soil for trading, okay? Now price starts to rise. You've got blue and climbing, and, you know, if you waited for these highs to be taken out, because you're cautious and you got in at 80.56. Price ran to 80.71. Goal for the day. Actually, it kept running at 80.82. Talking about on the way. Then price gets back below, triggers again, and takes us up to 81.03. That one was 81.06. So after it takes us to 81.03, which is another $300 per contract traded, then price on this candle dips back below, makes another run, and then it gets back below, makes a small move up to 80.91, more than your goal for the day in that candle. Then price gets below the BBC. Now, we've got a low, we've got a higher low, we've got a higher low. Now, this low that I talked about last night in the discussion group, and I showed you the discussion group, we knew that it would be important that price take out Friday's low before we could see any further downside movement. And so right now, you can draw a little trend line like that, but I wouldn't personally just trade a break of the trend line. I would wait for price to actually take out that low. Okay. Down to that low. And if it takes out that low, down to that low. And if it takes out that low, down to that bullish cross. And if it takes out that bullish cross eventually, then down to that low. And that puts you back at last week's zone. Goal. Right to the zone. And that's last week's zone. Here's where the market opened, and lots of room to get your goal on the way to the CTA number. And then once price trades through the CTA from 1815 up to 1818.2, that's $320 per contract traded. Then you should expect it to trigger again and again and again and again. Took us all the way to last week's zone at 1842. Has now pulled back to the BBC. When price pulls back to the BBC, we expect to find support. The pullback holds more often than it doesn't. And off this pullback low, we've already had a move. Let's see, this candle opened at. See, this candle opened and closed above the BBC. So the open of this candle was 22.9 and it hit a high of 25.9. $300 per contract traded in that candle right there. And it's still climbing. Now, blue and climbing, which again, as I said, is bullish until it gets directly above price. It could become an obstacle because that's what it looks like when blue and climbing is getting ready to turn into red and falling. Just as that's what it looks like when red and falling is about to turn into blue and climbing. Okay? You see how blue and climbing right here got directly above price and stopped price in its dead in its tracks. Then on the next candle, what happened? Turned to red and falling. Look at price. Then price had to fight its way back above the BBC. And as it got above red and falling, it became blue and climbing. And that set the stage for a beautiful trade from 1820 to 1840, 2 grand per contract traded. No woulda, coulda, shoulda here. All trading in the room in the morning is done right in front of you while you trade along and ask questions so that you can learn the strategy and how to read the indicators yourself. And all alerts are published well ahead of them actually triggering, so that you have an opportunity to study the alert, study your chart, so that you begin to see these windows of opportunity yourself. I mean, we could keep this whole thing a big secret and just keep milking you, you know, month after month and year after year. But we chose not to do business that way. We chose not to hold back. We chose to just teach how to trade so that you can become a self-sufficient trader. But for life, you'll have access to the indicators, and for life, you'll have access to the weekly trading zones, and the logic alerts, and the CTAs. There will come a time when you go to put on a trade because you've learned the methodology and the strategy and how to read the indicators and how to, you know, work yourself from the top down. You'll take a trade and you'll look over and you'll see that, how about that's the same as the alert. I just took a trade on my own and it's the same as an alert that was published a half hour ago. You've arrived. But it's a process. Welcome to the process. On the euro, this was the opening candle. We had a gap open, and we triggered, 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 and we triggered. I may have mentioned once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. Now when price dropped, it found support where? Right where you'd expect it to, which also just happened to be a weekly trading zone from last week. And then we go and trigger on the long side some more. Boom, 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 boom. Never did trigger the short CTA. However, price was below the gap filled. Could got your goal for the day right too. Okay, one last market and we're done. The bonds. Okay. Last night, the CTA for the bonds was to be long at 127.24 or short at 126.21. Obviously, you could have gotten your goal on the way to the CTA and then a whole heck of a lot more. From 126.21, we traded all the way down to 125.11. For a bond trader, that's a dream come true. So to those of our members who trade bonds, congratulations. That bell's for you. Okay. Back to the daily chart, where we're still straddling that 38% fib extension. Red candle, where we close today is very important. If we take out the low of today and the low of Friday, then we're headed back to the 24% reverse fib and the low of last Thursday. That's how price flows. When you finish your trial, go here, eminifuturestrading.com, to become a lifetime member. No recurring fees, no upsells, no new shiny objects to buy. Everything a trader needs, all under one roof, at one low price. That includes a live training room, 2 hours a day, every day. Unlimited one-on-one private mentoring. You'll learn a methodology and strategy that will work not only on futures, but on individual stocks, cryptos, and Forex. You'll own an indicator set for life that works not only on futures, but individual stocks, cryptos, and Forex. As a lifetime member, you'll receive the Logic 247 alerts around the clock. You'll receive the concierge trade alerts when they're posted every evening shortly after the Globex Open. You'll have access to the members only workshops every Thursday night at 8 p.m. Eastern. All that and so much more. The passport is your all access pass to everything we do, everything we've ever done, and anything we do new in the future. No matter what we do new in the future, you'll never pay another dime because you're a lifetime member. Let's wrap this day up. And if you have questions, call Valerie. She'll be back in the office in a little bit. 949-42-EMINI, or send an email to support@cfrn.net. Our good word for the day. Friday we talked about you're perfect while being made holy. And today, part 1 of God has redeemed you. Observe. God has a plan in mind that you don't see. Why did Jesus wait 2 extra days after hearing his friend Lazarus was sick before going to visit the family? He waited for 2 reasons. You can read about this in John 11:4. A, that your faith may be strengthened. Jesus said, I am glad for your sakes that I was not there, that you may believe. John 11:15. In life, crises come and go. Your next crisis will be different from your last one. But the thing that must remain strong is your faith. It enables you to face whatever crisis comes your way. B, that God may be glorified. The Pharisees believed your spirit left your corpse on the 4th day. Had Jesus arrived earlier than the 4th day, they may have said Lazarus wasn't really dead. Hence, Jesus said, this sickness is not unto death, but for the glory of God. It's in looking back that you see God's wisdom and will at work in every situation. Number 2, God will make you deal with issues you've tried to bury. When Jesus told them to take away the stone, Martha replied in John 11:39, Lord, by this time there's a stench. Are you praying for an answer in one area while God is telling you to take away the stone and deal with an issue you have buried in another area? When your heart is right with God, your prayers will be answered. See 1 John 3:21 through 22. And number 3, God will make you an example of His grace. Picture Lazarus after his return to life. Without speaking a word, his life declared to everyone that Jesus Christ is Lord. And the same can be true of you. God has redeemed and raised you up to be a testimony of His grace. That's part one. And that's our good word for the day. Tomorrow, part two. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.